What up, everyone? What's going on, AA? What an interesting day. What did I just get a message about? Notice against changing. Ah. Get started just a second, guys. Give it a minute or two. Let everyone trickle in real quick. Tomorrow's going to be a big day. I hope most of you kind of stay cash. I think that's probably much the smartest thing to do. Those of you that are pretty much degens, you're gamblers, I'm sure you pretty much have something going in either direction, calls or puts. But I think it would favor the market trend right now, in which I'm assuming everyone is just continuing to lean bearish, and I don't think the market's really giving you any other reason not to. What's going on, Randy? What's going on, Wayne? All right, guys. So let's get started. I'm sure some other strangers will pretty much just trickle in here just shortly, but kind of get started here. Basically, I kind of wanted to touch in to, of course, getting into projections, what I'm looking at for SPY, just some key levels to keep in mind. But the other thing that I wanted to cross paths about was pretty much following on suit of yesterday's topic, was looking at some long-term charts, and personally just some charts that I'm looking at for my long-term portfolio, and they no levels that I'm pretty much keeping on watch as we see this acceleration to the downside just starting to pick up. And believe it or not, I think we may even see more of that acceleration come tomorrow once we end up hearing that Fed statement tomorrow. Of course, just to give you background, everyone's expecting a 50 basis point rate hike tomorrow. That's the safest way out of this. That's everyone's pretty much expecting. However, there are extremes that are putting us out towards 75 basis points up to 100 basis points. So that would be more to the extreme scenario. Do I think the market's going to take that lightly? No, I do not. I think that the market's going to, regardless of the outcome, I expect the market to go down regardless. That's just no. Obviously, one's going to affect the market more than the other. If we get the 75 basis to 100 basis point rate hike, it's going to show that the Feds are pretty much showing that they're trying to get a more better handle on inflation. If we get a 50 basis point rate hike, then we're going to start hearing all around CNBC, Bloomberg, that we still think that the Feds have inflation out of control. That's pretty much the bottom line about that. Quick 250 QQQ puts and 400 SPY calls. That is quite the combination there, Randy. You got going on there. Do you know Sig is going to do the unusual options and chatter he posted end of each day? I know that he's been doing it. I haven't seen that he's actually stopped. Let me take a peep real quick for you. I don't think that he's actually stopped doing it, or maybe because of the volatility, he's maybe stopped. Let me just take a peep real quick. Honestly, yeah, I don't see that he's done it for quite a while. I'll see if I reach out to him for you and see if he can end up dropping that out there for you, Wayne. But it doesn't look like he's dropped it for quite a few days unless there's another channel. But I'll reach out to him and I'll touch bases to see if I get that updated and posted for you, Wayne. All right. You're holding FedEx puts. Well, the safest thing for those FedEx puts is that you are following the market trend, so I can't say that I disagree with that. It's not like you bought a call for no reason or took a shot in the dark to play a reversal for no reason. So if that's the case, you're holding FedEx puts. I agree with it in the sense of the market direction. Now, of course, the fact that you have a catalyst tomorrow with FOMC, that's something you want to be cautious about. Also, the heads up is that the FOMC statement does come out at 2 p.m. Eastern tomorrow. You're also going to get that press conference to follow by Jerome Powell, which should be roughly around 2:30 as well, so about 30 minutes after. The other kicker that we have tomorrow morning is that we also do have we have the retail sales data tomorrow morning, roughly around 8:30 tomorrow morning. So that's something to pretty much keep in mind with the retail data. See how all of our retail names are doing. Your Walmart, your Target. You could take a peep at Macy's. Actually, Macy's was one that I was shorting, I think yesterday. So that was a good one. So keep an eye on the retail. That may end up being more of a ideal risk reward tomorrow rather than maybe even looking at tech. So that's something to kind of keep in mind. What's going on, Jay? Jay, what are you holding right now? I know you're holding something overnight. You got to be holding something. But again, kind of just touching bases then, as I kind of get started. And as you see, I kind of have a little bit of a watch list, just names that I'm personally watching that I kind of want to buy for my long-term portfolio. So why not share the levels that I'm pretty much keeping on watch as we see this acceleration to the downside? But getting into pretty much SPY right now, we kind of wicked right into my level that I had around this 372 half. We saw that little V-shaped recovery that we had right into the end of the day. That was a hell of a squeeze. Shorts literally just got taken out right there. For those that pretty much stepped in late. So that's why in this kind of market, especially when you're trying to accelerate to the downside, it's best in your opinion that you have a far out expiration because obviously we would expect it to go back down, but you would have got squeezed out pretty quickly and your premiums would have got hurt if you have within the next day or two expiration. So if you are trying to pretty much press into the downside, the biggest thing is pretty much getting far dated expiration. As you saw, you would have got squeezed right to the end of the day. But 372 half was the level that I was watching. We saw that we had a nice little reversal. Levels that I'm going to be pretty much watching back to the upside here. I want to see us get over this 378 low. If we pop that 378 low, then I'm potentially watching us back up towards 381 half. If we could see a nice gap up here overnight out of nowhere, in which the market's just going to gap us up, and we'll see how the FOMC statements either flushes us right out the gate or it gives us a little bit more of a further push back up, in which case we can end up going up even as high as 385 here. Because I do have a anchor view up still sitting from our COVID lows at that 384.96. So if we end up in all likelihood getting some kind of relief here, I would expect to pretty much retest that anchored VWAP from the COVID lows as our resistance. In which case we'll test that 385 roughly, and then that'll be the spot that we get a full-on rejection and come right back down. All right, so that's the upside. Otherwise, I'm looking for continuation to pretty much break down below that 372 half yet again that we had today, and we push towards our targets 367 half, and then I have 363 as well. Ultimate price point that I'm particularly looking at is 359 to the downside here, which should end up likely hitting very soon, if not within this week potentially. All right, so that's kind of just the rough levels that I'm watching. It's gonna be. I'm actually hoping, and it's kind of just my personal hope, is that we do get somewhat of a relief here on the back of FOMC, that we end up retesting this anchored VWAP from the COVID lows. That's just a hopeful wish. Doesn't mean that it's going to end up happening. It may not in all no possibility, but 385 would be the spot that I would love to pretty much go back short yet again and really get a beautiful short off of that to take this right back down. That to me just feels like the ideal resistance point, ultimate risk reward spot that I would love to pretty much just get into. All right, you're all cash, sold or put on square. That's a nice setup. I like that. Um, why would I pull that up? All right, so pretty much jumping over again, I was getting to names that I'm pretty much watching here within the coming days. I want to say couple coming weeks to be safe. Disney was pretty much the top of the list. I think Jay was the one that actually talked about buying the mouse right now. He actually tagged me in chat asking me about that. This is one I still have my level pretty much marked out here. This chart pretty much dates back towards 2014 more or less. We're watching levels that you know will pretty much go right through COVID lows here, in which we had a little bit of a support that we ended up anchoring off of before a nice breakout in July of 2015. Nice support test, same level, that 85 mark, February 2016, and then we really ripped through right through COVID lows. So 85, 86 is that level that I'm watching for Disney. That's the spot where I'm gonna, particularly with this being relatively cheap at that price point, I'm likely gonna end up picking up some shares on this one, maybe about 10 to 15 shares, just personally from my long-term portfolio, right? So this is one that I'm ideally watching here that I personally want to pick up. 85, 86, that's the level that I will look to get into. Anything that we overshoot to the downside and even testing down to the exact COVID lows of what is this price point of 79, I would take that handsomely right now. I'll even average down if that be the case. But my ideal starter entry would be at that 85, 86 mark. And that's a level that you kind of want to make note. As I pretty much mentioned yesterday, now's the time where you make your shopping list. You make those notes of those levels that you want to buy. This is one of them right now. So 85, 86, that's a level that I would note down. Another one that I have on my watch list also is Salesforce. This is another one that I've loved this company for quite a while. I'm gonna look to see if we get a beautiful, cheap option on this one. Kind of want to go into leaps on this one. But 136, 135 was roughly that spot that I particularly want to get in on this one. Obviously, you see the breakthrough and the follow through that you had back from 2018 of July. You had a little bit of a resistance to support that you had between most of the end of 2018 up until the beginning of 2019 before you had a breakout, a little bit of a consolidation, a follow through, and then you retested those lows back from the COVID. All right. So I'm going to look for this one. 135, 136. That's the level that I'm watching on this one. Let's see if we get down there that low, and I'll likely see if I buy some leaps, whether it be out for more likely probably next December. Not this December, but likely next December. Give it a year, and that'll be a beautiful one that I likely end up getting out on this one. All right. So that's another one. Starbucks. This is one where we know that coffee is never gonna die. Starbucks is just literally still in high demand everywhere. The only reason why I think it's really more aided the downfall on this one is their China exposure. That's the part that sucked about Starbucks. But just the fact that I don't think this company is going anywhere, and I love Starbucks in general. This is another one that I want to add to my long-term portfolio, and this is one because it's the price point that I'm looking to get into is going to be so cheap. This is one that I kind of want to add shares on, similar to Disney. All right. So looking at Disney, I'm pretty much watching this one right around that 62, as low as 61 is what I'm going to be looking at for my entry point. We ended up smacking a resistance at that 61 spot back from January of 2018. We had a breakout, retested that exact same 62 level before we had a follow through on that further breakout, and we cut right through that 62 level during the COVID lows. So 62, 61, hopefully that will be the level that I ideally want to go in and pick up shares. In anything below that price point, I think that's where you pretty much average in. And as I always say, you get a starter at that specific level, right? And then hope that you overshoot to the downside. So 61, 62, I get my starter entry. Anything I get below that, then I could pretty much average in and get a better price point. All right. So Starbucks is another one. And then the demon of all, Amazon finally is actually at a reasonable price point in which you can actually buy multiple shares of this thing rather than buying it at that 3,000 mark. I love the price point on this one. I'm watching for Amazon to pretty much come in here. Around 86, 85 would be that spot that I'm watching. We see pretty much that relevancy in which we know that Amazon has gone sideways for quite a while. Between May 2018 up until March in the COVID lows, we pretty much teetered that 86, 87 level as a resistance or support. And that's the mark that I'm looking to get into. Again, anything below that, that's a gift. If you get this even at 80, say 83, 82, and we go all the way down to the COVID lows, that's a gift in which you pretty much add in. All right. Wayne, you like my ideas on the CRM and Disney. How about AMD? Would you get interested? Actually going right into that, that was actually the next one. I think someone asked me about AMD yesterday. This one I actually do love AMD a lot. I think the risk reward ideally is more so geared towards AMD for me than it is for Nvidia. I know that Nvidia is pretty much the powerhouse within the entire semi sector. I just love the risk reward for AMD in terms of a growth story in which that I think they still have a lot more to scratch on their surface than what Nvidia has already covered for majority. All right. So I'm pretty much aiming towards AMD in terms of the growth story rather than the powerhouse of NVIDIA that's already has its hands in everything more so. All right. But this one, watching for this one to come in towards the level that I'm watching is roughly around this 74, hopefully down to 73 mark. That's the level that I'm going to be watching for to get a starter entry. The only thing I'm a little bit more skeptic in this one is that I do feel like it's going to end up cracking that level. That's obviously why you see I have two different levels because you did have another breakout point that started basically from July of 2020. And so that's one that I'm also just kind of keeping a little bit on watch. I'm a little bit saying that it's going to end up holding. You had a very long consolidation period after that clean breakout that you had between July of 2020 up until May of 2021. So I'm hopeful this is going to end up holding that 73, 72 mark. Otherwise, if you can't hold 73, 72, then there's nothing but thin air holding this all the way back down towards 58. So that's the concerning part for AMD. But again, level I'm particularly watching is 73, 72. That's where I'm going to get my starter entry on AMD regardless. And then I'll see if I particularly have a tight stop loss if we end up breaking that, or if I end up just continuing to hold through the pain and I end up averaging in on this one. But this is one that I'm likely going to end up going in on shares just because of the fact it's under that $100 price point. I'll likely get shares because of just how cheap it is relatively. All right. But I love AMD again, more so because of the the growth story than being a powerhouse as opposed to Nvidia is. All right. And then the last one is pretty much Apple, ride or die with the market. We know that Apple kind of controls this entire market more so. Watching this one to come in down towards this 120, I want to say 123, 122 mark. That'll be the spot where I ideally want to see if this ends up holding there. You get your starter entry. Anything below that should potentially be pretty much a gift in which you average in. All right. You see that nice little wedge action that you built that started way basically back from September of 2020 up until June of 21. So I want to end up getting down towards the support level of that wedge that you ended up getting, your last level of support tested before you had the beautiful breakout. So 122, 121 is hopeful, and that'll be where you get your starter entry. Anything below, you look to average in. But the very key part about all of this is that once you get that first key level that you're watching, you get your starter entry there. You don't go full size at that exact price point, right? I don't think when you're looking for long-term positions or even short-term positions for that matter, you look to average in because once that stock goes down, let's say 10, 15%, now you're like, oh crap, now do I end up cutting my loss? No, at that point, now you can say, all right, now I can actually take a little bit more of a risk because I didn't go full size in my position, especially when you're going in heavy and you're looking for it to go long term. There's always a risk that you can overshoot to the downside, and that's what you want to be prepared for. All right. So hopefully that kind of helps you guys in terms of what I'm gauging right now. I'm not more so paying attention to the day-to-day factor and names that I'm looking long term. I'm just waiting for them to come in closer to what my price targets are that I want to pick them up for my long-term portfolio. All right. And I think that's the biggest thing that you really want to focus on during all of this volatility, everything, all the noise that's going on right now. This is where a lot of these people, know, a lot of these big money makers, this is where they make their money. This is where they look for all those cheap names. So they're looking at names that are pretty much trading at a lower PE, key levels that date back to years back, that they shouldn't have even been retested for that matter. And this is where they pick them up and they hold them for years, basically. All right. So that's pretty much the key part. Hopefully, I was pretty much able to help you guys kind of give you a little bit of a gauge. This is just my personal watch, just the names that I'm particularly watching. Next time, maybe tomorrow, then maybe I can actually take requests, names you guys are looking at, and we could potentially look at those and see maybe those key levels and help you guys get that ideal entry point for your long-term portfolio. All right. But hopefully that kind of helps you guys. I'll kind of keep it short and sweet. Again, tomorrow's going to be a very pivotal day with retail sales data coming out at 8:30 in the morning. Then FOMC at 2 o'clock. Jerome probably going to be talking for about a good hour at starting at 2:30. It's going to be quite an interesting day tomorrow. So be prepared for that. Keep your size to a minimum. Volatility is not going to be on your side in terms of wanting that explosive move. Yeah, it may not even be in your favor, is what I would say. So that's something to just keep in mind. I think, like, a lot of people ended up getting short squeezed out at the end of the day, thinking that they would end up, pressing into a short, and then you just get raped right out of that. So you definitely don't want that to end up happening, all right? But I'll leave it at that. Keep it just short and sweet. But I'll see you guys. Hopefully I'll see if I'm be on live tomorrow. I've still been working on some back end stuff, trying to get some things working for TFC. So but other than that, you can ping me, you could probably DM me in Discord if anything, and I'll pretty much respond to you guys, all right? Please ask Sig about his options post. Wayne, I'll definitely reach out to him. I'll drop him a message and I'll hopefully be able to get that posted for you just shortly, all right? But other than that, appreciate you guys